Because I remember that we were on at the end of middle to the end of December, and you said, yeah, the markets stink, but I think we're going to have a nice rally heading into the end of January. You nailed it. I mean, we had a very, very solid January. The question is, Sven, what do you see now?
Well, you know, there's three elements we really need to look at here. One is technical, which is the premise for the rally back in late December was that we were really technically steeply disconnected, and the market needed to find a balance and basically reconnect with all the broken moving averages. And that's exactly what we've seen now. Now, this rally has been extremely aggressive because the Fed really fueled this rally here into January. The destination was not unusual. It's the speed and the slope of this rally. And this brings me to the second point, which is policy. The Fed has completely caved. You know, they went from 4 rate hikes in 2019 to now 0, basically, and obviously indicated now flexibility on the balance sheet and willingness to even stop it altogether. So completely 180% turnaround again. So now what we see, and obviously, is equity markets reacting to this, and we see a lot of cash flowing back into markets and bringing us right now up to major resistance. And the third point here to our highlight is all this is happening in context of macro data still deteriorating globally. Europe is looking to skirt closely with a recessionary environment. Italy is already in a recession, and obviously growth in Germany is also slowing down dramatically. So now we're finding ourselves at this key point of resistance, and we need to find out if this is a market that actually can thrive on further good news, or whether we're setting up for a bear market rally here that could see a retest coming in the next few weeks or months.
When will we know? What kind of technical level, what kind of price point will give us the indication of whether January was an anomaly or the sign of good things to come for the year?
Well, you know, a lot of people are talking about the daily 200-day moving average, which is resistance just ahead. There's more than that, that we have also the weekly 50 moving average, and we have the monthly 15 MA. All key moving averages that are converging just here in the next few handles, if you will, between 2730 and 2760. This is kind of the area that we need to see not only a move above, but a confirmed move above. What that means is that if we were to move above this area on a retest, this zone needs to then hold. If that cannot happen, then obviously we're looking at a retest. From now, at the current moment, we're extremely short-term overbought, and so markets are struggling with this area right now. As long as they can hold, let's say, the 2600 zone and the 50-day moving average on any retest, then I think bulls are fine to move, at least try again to get across this resistance here. Failing to do so, if we drop below 2600 again, then I think we may be looking at major work to the downside still.
Now, Sven, I know you're more of a chartist, okay, but I also know you're a smart guy, so I'm going to ask you a fundamental question. The European Union, minutes ago, coming out and cutting their growth forecast for the Eurozone from 1.9% to 1.3%, more than 0.5% off the EU's growth. That's a huge cut. What does that tell you about, A, the economy obviously slowing down, but B, what that might do to financial markets?
Well, Brian, I mean, you're hitting on a really key point here. Imagine we're 10 years after the financial crisis, and the Eurozone is still on negative rates. They just finished or stopped their QE program here at the tail end of 2018. And so now we're looking at virtually no growth whatsoever with negative rates. If the Eurozone were to go into a recession, with negative rates still in place, we're really entering undiscovered country here. We've never seen this before. I mean, the point of negative rates and the point of QE was to stimulate the economy. And so now that we're not seeing a stimulated economy, but a rather aggressive economy, I have to raise the question. I mean, are we looking at a colossal failure of central bank policy? And maybe the same applies to the U.S. as well. Keep in mind, in 2018, they've tried to reduce the balance sheet for the first time. It worked for a few months while the tax cut was still filtering into the economy. But then all of a sudden the bottom dropped out in markets with a 20% drop. And now they're stuck again, and they have to hold off it on that particular policy.
I know you're a resident, Sven, of the UK. I want to jump in. I'm sorry on this. Do you believe we're 50 days out? In your head, do you believe we're not going to be able to make a deal, and there will be what they call the hard or the no deal Brexit. What is your prediction for what's going to happen in 50 days' time?
Oh, I mean, Brian, I got to be honest with you, this is a no-call situation. I mean, I've been watching this here for the last couple of years, and there's just absolutely no agreement here within in the political spectrum here in the UK. I mean, and it's not an easy situation for Theresa May, because she has, even within her own party, she has opposition to the deal that's been proposed by the EU. So there's no clear path here at the moment. So it'll come down to the wire for sure. She's back in Brussels this week, and maybe she can come back with something. But the EU has also made very clear that they're not going to budge much. So someone has to make some tough choices here.